Something historic just happened, and almost nobody in retail crypto is paying attention to it. In the last 72 hours, 3 separate forces converged on the same conclusion at exactly the same time. A presidential executive order, a joint SEC and CFTC legal confirmation, and public statements from the CEOs of BlackRock and Coinbase. All 3 pointing at the same asset. And that asset, XRP, is sitting at $1.43. That combination, simultaneous legal clarity, simultaneous institutional entry signals, and a price that has not responded, is not a coincidence. That is the final phase of the setup we've been tracking on this channel for months. If you're watching this today, you are ahead of 99% of retail investors, because by the time this hits mainstream headlines, the accumulation will already be over. Let me walk you through exactly what happened, what it means, and what the smart money is doing right now. Before we get into the breaking news, 30 seconds of context, because this story has layers. If you watched the March 27th deadline video, you know that institutional players have been quietly positioning in XRP since late 2025. 7 spot XRP ETFs launched, $1.44 billion in inflows. Goldman Sachs holding $154 million in XRP ETF exposure according to SEC 13F filings. And XRP's price sitting at $1.40, down 61% from its all-time high of $3.65. We called that the shadow game. Institutions accumulating through ETF creation baskets, absorbing supply without triggering visible spot price movement. The question we left you with was, what's the trigger? Today, I'm telling you, 3 triggers just fired simultaneously. Let's start with the biggest one. Under President Trump's executive order on digital assets, the SEC and CFTC have jointly confirmed XRP is not a security, not a commodity debate, not a gray zone asset, not subject to the kind of regulatory risk that's kept institutional allocators on the sidelines for years. And here's what that actually means in practice. Every major pension fund, every sovereign wealth fund, every endowment that has been told by their legal team, we cannot touch XRP because of regulatory uncertainty, that wall just came down. We are talking about trillions of dollars in institutional capital that was legally prohibited from allocating to XRP. As of 72 hours ago, that legal prohibition no longer exists. Let that land for a second. This is not a news headline. This is a structural rewrite of who is allowed to own XRP. And XRP is at $1.43. If you removed every legal barrier to institutional ownership of an asset and the price barely moved, one of 2 things is true. Either the market doesn't believe it yet, or someone is making very sure that retail doesn't react before they finish accumulating. I'll let you decide which one you think is more likely. The second trigger is Bitcoin. In the last 24 hours, $854 million in short positions were liquidated. Bitcoin surged to $71,000. The total crypto market cap moved up more than 2% in a single session. Now here's what most retail investors get consistently wrong about a Bitcoin run. They watch Bitcoin. They miss what's happening in the capital flows underneath it. When Bitcoin moves, institutional liquidity does not stay in Bitcoin. It rotates. It moves down the risk curve from BTC to ETH, from ETH to large cap assets with institutional infrastructure, regulatory clarity, and existing ETF exposure. XRP checks every single one of those boxes right now. And here's the historical pattern that should get your attention. The last time Bitcoin had a run of this magnitude, XRP's price lagged by approximately 21 days before catching up. When it did, it moved in multiples, not percentages. That 21-day window is the window we are sitting inside right now.
Now let's talk about what Larry Fink and Brian Armstrong said publicly in the last 48 hours. Because when the CEOs of BlackRock and Coinbase align on the same narrative at the same time, you don't ignore it. Both men confirmed publicly that the second institutional wave of crypto adoption is underway. Not coming, not expected, underway. Fink's language was specific. Yield-bearing digital assets, around-the-clock liquidity. These are the two forces pulling institutional capital off the sidelines right now. Armstrong echoed the same framing. This is not retail speculation. This is institutions rebalancing portfolios. Now remember what we covered in the March 27 deadline video. BlackRock has not filed for an XRP ETF yet. The analyst consensus, led by Canary Capital CEO Stephen McClurg, is that BlackRock is waiting for existing XRP ETFs to cross $3 billion in combined AUM before filing. Current AUM, approximately $1 billion. Gap to the trigger, $2 billion. Larry Fink just told the world a second institutional wave has started. The Clarity Act is advancing through Washington with a potential committee markup as early as April 2026. XRP now has full legal confirmation as a non-security asset. How long does it take $2 billion to move when every gate just opened at once? I know exactly what some of you are thinking right now. If all of this is true, why is XRP at $1.43? This is the most important question in crypto right now. And the answer comes down to one word: infrastructure. When institutions buy XRP, they are not going to a retail exchange and hitting a spot market buy button. They accumulate through ETF creation baskets, structured transactions with ETF issuers that absorb supply at scale without generating the visible buy pressure that moves the spot price. We saw this exact mechanism play out with Bitcoin in 2024. BlackRock's Bitcoin ETF pulled in over $17 billion in inflows, and for months, the spot price barely responded. Retail looked at the inflow numbers and couldn't understand why the price wasn't moving. Then October 2024 arrived. In 4 months, Bitcoin went from $44,000 to $73,000, a 66% gain. The accumulation phase had ended. The price discovery phase had begun. XRP is in the accumulation phase right now. The supply on exchanges has already dropped from 4 billion to 2.6 billion XRP since ETF approval. The float is shrinking, and when the available supply drops below the threshold where institutional demand can be absorbed quietly, the price moves, publicly, rapidly, without warning. The coiled spring analogy I used in the shadow game video, that spring is tighter today than it has ever been. If you want to know when the accumulation phase ends and the price discovery phase begins, here are the 3 signals I am tracking personally. First, XRP ETF combined AUM crossing $2 billion. That is the next psychological threshold before we approach the BlackRock filing trigger. You can track this daily through Bloomberg's ETF data. When that number moves, everything downstream accelerates. Second, the Clarity Act Committee markup date. If the Senate Banking Committee schedules a markup in April 2026, as crypto policy analysts are projecting, that is a direct catalyst for institutional inflow acceleration. Watch Washington, not the chart. Third, XRP exchange balances. We are already at 2.6 billion. When that number drops below 2 billion, the available float for spot trading shrinks to the point where even moderate buy pressure causes significant price movement. This number is the most important number in XRP right now, not the price. These 3 data points tell you more about where XRP is going than any price chart does. Because by the time the chart confirms the move, the setup is already finished. I want to take 30 seconds here because I think it matters to connect the dots across everything we've covered on this channel. In the shadow game video, we showed you that institutions were suppressing price while accumulating. In the March 27 deadline video, we showed you that the deadline wasn't about SEC approval. It was about institutional positioning. And today, in real time, we are watching the legal barriers fall, the CEO confirmations arrive, and the capital rotation begin. This is a 3-part story playing out in public, in front of everyone. And the majority of retail investors are still missing it. Not because the information isn't available, because they're watching the price instead of the mechanics. The price is a lagging indicator. Everything I just walked you through, the executive order, the AUM gap, the creation basket mechanics, the Clarity Act timing, these are leading indicators. And right now, every single one of them is pointed in the same direction. Here's where I'll leave you. The second institutional wave has started. That is not my opinion. That is Larry Fink and Brian Armstrong on record in the last 48 hours. XRP has legal clarity it has never had in its history. The price is 61% below its all-time high, with $1.44 billion in ETF inflows already confirmed. You have a choice right now. You can wait for the mainstream headline that confirms what the leading indicators are already showing. Or you can understand the mechanics, track the signals, and be positioned before the price discovery phase begins. This channel exists to give you institutional grade research without the institutional access fee. If this video gave you a clearer picture of what's actually happening with XRP right now, subscribe. Because the next chapter of this story is going to move fast. And if you want to understand the full accumulation setup behind everything I covered today, the Shadow Game video is linked right here. Watch that next. I'm Steve, this is Crypto Corner. The smart money is moving. The only question is whether you're watching.